You can be 100% correct about the direction of the markets, enter the trade perfectly, and still lose money. Well, this happened to me twice this week. Euro US dollar and Euro British pound. I got the direction and still lost the trade. Though I had a good trade where I made profit, but it's also not a good trade simply because I had FOMO. So in this video, we're going to be looking at all the setup and what I may be looking at going forward. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. This is the current stance of the account balance of the $50 account, which I've been trading for the past 3 weeks now. Actually, it's more than 3 weeks, but let's just call it 3 weeks. And you can see I am down $43.11. Looking at the calendar, you will notice I constantly somehow lose $2 every week, which is a terrible way to say I'm looking like I'm terrible at trading right now. However, let's look at the real intricate situation, right? Taking a look at these 3 trades, we have the Euro US dollar trade, where I lost $4.37. We have the Euro British pound trade, where I lost $3.71. And last but not least, we have the New Zealand US dollar, where I made back $5.75. Let's take a good look at each and every one of these trades individually. Heading straight first for the Euro US dollar. And for the Euro US dollar, what is the setup? Well, it is a very simple strategy. The strategy is all about market structure, following higher highs and higher lows, or lower lows and lower highs, and then trading it based on the direction of 20 and 50 EMAs. 2 days ago, I saw this market having turned in its direction to the upside on the lower time frame. And why did I take this trade? Well, the fundamentals said that the market is quite bullish in its opinion. And then on the daily, I saw a zone where buyers had previously stepped in, but buyers came in right here at the daily demand zone. So what did I do? I went down into the 1 hour, waited for the EMAs to align for me, and also watch out for market structure, which market actually did work out for me. You can see market work out here, pulling upwards and finally pulling up. So I decided to get into this trade right here. Upon entering this trade, well, the market decided to pull the fast one on me, right? It was more like a rug pull. The market instantly went down against me till it caught me off guard on the stop loss right there. So this is how I lost the trade. And as you can see, the market even chopped even further before suddenly pulling way up. This is the Euro US dollar loss. It was absolutely painful, and I did not enjoy it one bit. I would have been in good profit right now, but I got stopped out. Let's head into the next trade, the Euro against the British pound. So for the Euro against the British pound, I use a different strategy called the Bollinger Band Mean Reversion strategy, and I trade this on the 4 hours because this is where I have tested the strategy to have the best edge. As you can see, it has a 1.59 profit factor. So what is the strategy here? When I see price pull above the 21 EMAs, I'm hoping for price to continue in that direction back to the midpoint of the Bollinger Band range. So in this case, as you can see, I took a buy here after we have seen the opportunity to go long. And after the buy trade, well, price kind of moved for some days and finally stopped me out right here. So this is the second trade I took. It was not a good loss, right? But second reason I took this trade was the fundamental situation also printed for me that the euro is quite stronger than the pounds at that moment. So it was, both economically sound to take this trade as well as technically. However, the market said otherwise. Now for the last trade, the New Zealand dollar against the US dollar, I used a totally radical style of trading, something that people do not really pay attention to much, but however, it works also. It's called the Quasimodo generations and Quasimodo reversal. In this case, this is a Quasimodo reversal strategy. Now, I'm not going to explain the strategy in depth. I'm just going to give you a heads up of what the strategy is. So we all know about uptrends and downtrends. We all know that at the bottom of a downtrend, we have something called a choke that leads to an uptrend. Same thing for uptrends leading to downtrends. There's something called a choke that we always see there, which is basically change of character, CHOCH. What happens in this place? Well, if price is making higher lows and higher highs, when price wants to finally when market wants to change direction, what happens is we always get a low that becomes no longer accepted, and then price makes a high. Now the high is most likely going to break the last higher low, and then the last higher low, or higher high, the last lower high, and pull back a little bit, and then this time go back to break the new higher high it has created, leading to us saying, oh, this market is most likely changing structures. This area here is the change of structure. So the strategy is all about trading change of structure, or a change of character of market, and that is what the strategy is all about. What do? We aim for the area around here, which is the last bearish candle that ended the last lower low, and we hope that when price is moving away, price doesn't completely return to that range, but when price moves away and creates those two breaks, it may come back here, break through this one, come into this area, and find liquidity enough for it to pull up even higher. The whole point of this is to capitalize on the small return of holding down the funds like this up to a 2 or 3 risk to reward ratio, depending on your observation, because we all know that, or rather we all think or feel that when the market starts changing its structure, it is most likely heading back for the already existing high that started the entire range, basically. So that is what the QMRO is all about, reversals. So that is exactly what I have here. I have the markets coming down, as you can see, printing a downtrend, and then I have my first spot, right? This is the high, the lower high, which price first broke away from. When price broke away from it, price pulled back a little bit and went away again, breaking this other higher high it had created. So I placed myself in position, right? Saying, okay, if price comes back and closes below this structural liquidity, it's most likely going to shoot up looking for a 2 to 3 risk to reward ratio. I entered this trade absolutely well. Beautiful entry, accurate entry, basically. I entered this trade as soon as price got into the space. I already placed the pending order though. As soon as price got into the space, I entered the trade hoping for it to reverse. Why did I leave this trade early? Well, first reason I left this trade early is this. On the daily, I have a daily supply zone right here, as you can see. On the 4 hours, I have an overlapping 4-hour zone right here. Two situations right now. But then again, on the 15 minutes, when price returned into the necessary zone, it reoccurred, like it did the QM arrow over again. Price reversed in similar manner. You can see the high and then the lower low, the higher high breaking the last lower high, returning back, price a little bit, and then guess what? Price broke up again. So if price takes out this low, it's most likely going to pump up again, which is on the 15 minutes. And if you look down here, let's place price entry. The price should enter after this break. Stop loss should be below the entire lowest structure, and take profit at 3. And you can see how that was a complete hit immediately. So to me, seeing that the lower time frame had already occurred, I had less faith in my higher time frame. And then to make it worse was price did move above that, but guess what? Price did an immediate pullback upon touching the 4 hours supply zone. So upon seeing this like major pullback, I said to myself, so I don't lose the money I have made, right? Let me just step out. I would have made a whole lot more than actually twice the amount I made, which is about $10, but it's the FOMO, right? Fear of missing out on the $5 I've made. Well, I'd better just take my $5 and go home, right? And that is exactly what I did. So what's my lesson today? What did I learn? I learned that even though the market looks like it's going in a funny direction, still take your trades, right? Still take your trades, but watch your risk. Now, for me personally, I closed the market out of number one, FOMO, but also it was also kind of calculated, which was, what is the calculation? Well, basically, what I see here is an opportunity to save myself some money for the future and still be able to trade with the account. I've been losing $2 every week. If you continue at that rate, I have roughly that's like 25 weeks to wipe out the account. If in 25 weeks I'm not profitable, then I really cannot be profitable if I keep losing $2 every week, right? But however, I have one trade still ongoing. So let's take a look at that trade. That trade is up $8 in profit. May bring my account back to 50 if it continues running in profit. So let's take a quick look at what that trade is. That trade is the euro against the Swiss franc. So why am I in this trade? Well, I'm in this trade because when I looked at the fundamental analysis on my dashboard, I have a dashboard which I'll be showing you guys tomorrow. I saw that the euro against the Swiss franc was bullish, and when I opened the chart, I noticed that it's basically a downtrending chart on the daily. So I said, let's check out if price is going to do similar with what it's supposed to do in the euro US dollar. Is it giving us that chance for a bullish movement? So I entered into the 1 hour and I noticed it was beginning to give me a good structure to the upside, though I'm getting a weekly start from very dangerous zones. What did I do? I went for my market structure strategy and placed it up on this chart. Now, placing it up here, I noticed one thing, right? One simple thing. I had an opportunity printed for me right here. So I waited for price to return from that area close to anywhere where I'm supposed to enter a trade, which is at this level, at the 0.90 level. And as soon as price made its way towards that direction, I entered the trade, and currently I am up $8 in profit. I may end up returning some of this profit to the market. It's possible, a huge part of this profit to the market. I had risked, I think, about $4 or so, about $3 or so, but right now you can see my risk has finally come up to not losing anything, basically currently holding down 36 cents from the market. If the market continues like this for about 8 candles, I can move this stop loss up to this direction of $4.44 in profit. So that will take my account balance all the way from where it currently is, which is at $43 to roughly $47 or so. So the account will be a little bit in profit, but not all the way back to break even. Close to break even. It's risky trading I'm doing here. $50 account is not something that's worth trading, trust me. But if it's the learning process, then let's use it as a learning process. This is my lesson for myself, and I hope you learned something from this video today. Do well to hit the subscribe button, like this video, share with someone who you think may find this information valuable in their trading journey. See you all in another one. Peace.